Hi everyone, welcome back to Corporate Decoder. Today we are diving into a report from Metropolitan Bank Holding Corp, and it sounds like they are planning a spending spree, but is it a smart move or a recipe for disaster? Let's find out. We're looking at a Form 8K, which is basically a quick update a company sends to the Securities and Exchange Commission, or SEC, about important events. This one was filed on March 12, 2025. The big news here is that Metropolitan Bank Holding Corp's board gave the okay to buy back up to $50 million of their own stock. This is called a share repurchase program. Basically, the company is saying they think their stock is undervalued and they are going to use their cash to buy some of it back. It's like when you think a pair of sneakers you like is on sale, so you buy a bunch hoping their value will go up. The company can buy back shares whenever they want, as long as they follow some rules. One way they can do it is through something called a Rule 10b5-1 plan. This is a way for companies to buy back stock even when they might have inside information that would normally prevent them from doing so. Think of it like setting up an automatic stock buying robot that follows preset instructions no matter what the humans at the company know. How many shares they buy and when depends on a bunch of things, like how the stock market is doing, what the stock price is, and what the rules say they can do. It's not a guarantee they will buy back all $50 million worth of stock. They might buy a little, a lot, or none at all. It's all up in the air. The company plans to use the cash they already have to pay for these stock buybacks. The program doesn't have an end date and they can stop or pause it whenever they want. In other words, they aren't required to buy back any specific amount of stock. They even included a copy of the press release announcing this plan as an exhibit to the report. This is pretty standard. Companies like to tell the world when they're planning something like this. Now, before we get too excited, let's talk about the fine print. This report includes what are called forward-looking statements. These are basically predictions about the future. The company uses words like may, believe, expect, and anticipate to signal that they are talking about what they think will happen, not what has happened. The company warns that things might not go as planned. There are risks and uncertainties that could cause their actual results to be different from what they expect. They're saying, hey, we're making our best guess, but don't hold us to it. So what could go wrong? A lot of things, changes in interest rates, problems with their loans, unexpected expenses, the economy tanking, losing key employees, and even cyber attacks are all listed as potential risks. These are just some of the things that could throw a wrench in their plans. They also mention things like natural disasters, wars, terrorism, and pandemics as possible risks. In short, the world is a crazy place and anything could happen. The main thing to understand here is that the company is trying to protect itself by saying that the future is uncertain and they can't guarantee anything. And of course, the report is signed by an executive showing that the company stands behind what they are saying. And so what does all of this mean? Well, on the surface, it looks like Metropolitan Bank Holding Corp is confident in its future. They have enough cash to buy back $50 million worth of stock, and they think it's a good investment. This could boost the stock price and make investors happy. However, we did not see the financials. We did not look at the assets of the bank, and we do not know for certain that they can indeed afford this program. So we are going to assume that they can. But there are also risks. The stock market could crash, the economy could worsen, or something else could happen that throws the company off course. Also, we should note that the company might be doing this to prop up the stock price because it is not doing so well. So it could be a little bit of a gamble to do this. Overall, this share repurchase program is a sign that Metropolitan Bank Holding Corp believes in itself, but it is not without risks. Investors should be aware of these risks before making any decisions about buying or selling the company's stock. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.